Well, good day, all. Ira Epstein of Linn & Associates with your metals market update. And this update is for Tuesday, the 26th of March, 2019, pushing 2:55 p.m. Central Daylight Time. So as we look, we can see the gold and silver backed off. Copper's been going sideways here, and the platinum market was able to put on some small gains today. Now, these aren't the settlement prices, but they're very close to them. Remember, settlement prices in the metals occurs at 12:30 p.m. Central Daylight Time, and then trading still continues to 4 p.m. Central Daylight Time. Working against the market today was the rally in the dollar index as traders come out and they say and doubt, of course, that the curve yield, the inversion between the 3-month and the 10-year, it happened, but it doesn't mean anything. The market's probably ahead of itself. I think if you go back to 1975 forward and you pull news articles out when that happens, it's probably different people saying the identical thing. The problem is it's often a sign that a slowdown, possibly a recession, is coming in the economy. And every time, I've been at this 50 years, every time it happens, there's always, it's not that way this time. The problem is the track record of it's been darn good. So pay attention, that's all I can say. In the stock market today, we're getting a market that's able to hold a rally. It's tried to get up way higher and fallen back at times. It was an interesting day in the marketplace. And again, one of the things traders are looking at right now is, have these markets seen their worst at this point? In other words, getting down to about a 2.4 yield in the 10-year, was that really pushing it? When you come to the gold market, I can't say anything's negative on this chart. I can say that there's still a down thrust, this leg, from 1329.20 to 1229.20. Remember, this is only closing prices. Took out this trough, and you haven't been able to go up and break through anything. When I come to the daily chart, the glaring thing is an inside day. You did not take out yesterday's high or low. And when I look at the swing line, I still have a pretty clear pattern here of higher lows and higher highs. That's bullish unless 1312.80 is taken out, at which point, what happens? Then you'd have a higher high, lower low, you'd have stepped out of the trend. Can this turn bearish from right here? I want to be clear. As a technician, that's all. Take off the name of the chart. No, you can't get immediately the lower highs, lower lows. You can add to this to the upside, but you can't start a downtrend. What about support? Well, there's the negative, because to get down to key support of the 18-day average, what I call the line in the sand, you'd have to break through the last break low, and then it's about $6 lower, so that would put you neutral in the market. What about resistance on the upside? Well, I think you're there. And for those of you that haven't done it, if you go to our website at www.iraepstein.com, under the word education, you'll see a slide down menu. My gold report is there, and it's a video report. You might want to take a short look at that, get an idea why I'm saying where the resistance is showing up, and at the same time, you're overbought. So are we in a stall? I can't answer that. You're in a stall if you take out 1312.80. The market still has the capability of still challenging that upper Bollinger Band, but it's got a resistance point right in front of you. And the same thing has happened in GLD, the popular gold ETF. It has higher lows, higher highs, and like the gold futures, even if you take out 123.73, it doesn't start a downtrend. It takes you out of the uptrend, doesn't start a downtrend, and you are overbought. Again, the trend is up, but you've hit upside targets in an overbought condition. In GDX, the market is overbought, not in a trend. It is doing its darn best to push out the top layer of the resistance back into this area. Now watch what I'm saying. Market hits the upper Bollinger Band yesterday. The settlement's 23.26, just over the upper Bollinger Band. You only stay over that band typically 5% of the time. So hitting it You can do like you did here, pushing on it, but often the market pulls back into the band. What it's trying to do right now with a 23.31 last price, and remember, we're just about closed in the stock markets, what it's trying to do is stay under that band but still push it and stay within that 5% area. You are overbought, and as I said, not trending, but what the market's doing is extending the upside of the market at this point. In the gold-silver ratio, and this is June gold versus May silver, you keep coming back to this 18-day average of closes and holding it, which means gold is still stronger than silver. Each of these numbers represents, in a perfect world, where you have your shopping cart, you put an ounce of silver in each one, you go to a store, there's no commission, and you trade in right now 85.61 ounces of silver for 1 ounce of gold. Got it? That's the concept here. As you look at the silver, the difference, and you can see it, how you're starting to narrow in. Again, you have a market that if you look at the numbers, any number over 70 in this is overbought, so you're overbought. The trend is up. There's layers of support here between 1530 and 1526, the 18 and 100-day averages, but to get down to them, well, the fear is, do you take out this 1536.5, that low? And you would, and that would ruin what? An attempt at an uptrend. But something else happened today. Let's go to this high, 1565. You can see it right here. There's your high, 1565. You break down, you come up on this day to 1559, and now that's another swing line. So what the swing line has done to you is you've got higher lows, but you got lower highs. You're not trending. You're narrowing in like that at this point in time for whatever's going to come out of it. In the copper market, seeing a rally back over the lower Bollinger Band should be expected. You only stay under Bollinger Bands 5% of the time. My own theory on this is that you can take each successive close under it and subtract it from that 5%. Can you get to a condition where you're beyond it? Yeah, you just did it in hogs. Go on your chart and count how many times that occurs. Remember, you're not trying to go long here. The question is, should you be out of shorts? That, to me, is what the question is, and my answer is the first challenge of a Bollinger Band to the up or downside is often where the pros do it. Now, unlike GDX, what's this market doing? It's trying to push prices out of the sideways action and find a lower trough in the market, which isn't overly bullish, U.S.-Chinese talks. When you look at the platinum market, you've got a pattern of higher lows, higher highs. I think you'd agree that the challenge of the 18-day average held. It's not all that impressive because as the market's doing that, you have a 71.42 reading. You're overbought in the market. And in the palladium market, for the first time in a long time, if you take out 1501.30, I could actually say you've entered a downtrend because you'd be under the 18-day average, assuming prices stay under that. You'd have got a pattern of lower highs, lower lows, and momentum's turning down. It could be a candidate for something we haven't seen. I don't know how to even go far back. I'd have to change the chart in that long of a period. So is the market weakening? If that occurs is going to be the big question. And my answer would be yes, if it occurs, that we put a chink in the armor. The other breaks have carried to the 18-day average and held it. This could be very different because it would have the swing line freshly down. Back here, the swing line turned down at higher numbers to get to the support. It's a different chart pattern than the one I'm presenting. In the dollar index, the dollar is getting stronger here. You can see that today's high, 96.31, took out that high. So I'm going to argue that somewhere either this number or this number is the high. I can't tell you which because of this crazy action right through here. And that happens on charts. You can't sometimes analyze the action that they did. And momentum is up. Bias is up, momentum here, the bias up, and if the market takes out 96.29 out of nowhere, it re-enters an uptrend. I wouldn't have thought that with interest rates falling, but that's what it could do. The risk on the trade is not to get back under than yesterday's low, and that low is 95.89.5, so a very interesting dollar chart. You know, one of the things we do at Linn is a lot of written research, and it's on all these markets that I talk about. The different categories are listed right through here for you. One of the coolest things that we have is if you get our trade platform, and I'm talking our desktop, orally, you're going to hear our different commentators come out through the day, and if you miss it, it's not a problem. We make a recording of them all. You just click it and you hear them on all these different markets. And if you're a hedger, speculator, options trader, futures, it won't matter. Spreads, we talk the differences, what's going on through there. You owe it to yourself to give it a try and see what we're talking about. You don't get this in the futures markets in very many places. I'm talking all trade day long. Our staff is doing this. How do you get it? Well, you can get the research on our platform. You can get our trading kit, or you can go on our website. You'll see our different offerings. Take advantage of them. You can click up here to get to them as well. With that, I'm Ira Epstein. You have a good day.